Video, we'll be going over IRS Form 1099-K, payment card and third-party network transactions, a walkthrough on how to report a personal sale at a gain from the IRS. So in our walkthrough in Form 1099-K, we talked about a place on the IRS website that showed different ways that you could report your 1099-K transactions to give the IRS some context of the nature of your transaction. So in a previous video, we walked through how you would report the sale of a personal item at a loss. You could either do that on Schedule 1, or you could actually just report the loss on IRS Form 8949, and then that possibly could deduct from your income elsewhere. So when it comes to items sold at a gain, you have to use IRS Form 8949 to report any capital gains that you might have experienced. So we're going to walk through this form the way it was presented to our hero John Doe, and then we're going to flip over to our IRS Form 8949 to kind of walk through the nuances of that transaction. So for those of you familiar with our other video, this looks almost identical. We've got the name of the filer, Acme Electronic Payments. They were basically an electronic payment facilitator. The actual company that did the payment settlement was Venmo. I don't know if this is accurate or not. This is all kind of gobbledygook that appears on your tax form. It may matter if you need to get a corrected version of this form, but both parties, if there's a party listed in two different fields, should have contact information, at least so that you can get started with the bureaucracy. So once you get what you think is a correct version of this form, you should verify that it's got your name and address in here, your correct information. It may or may not have an account number, but it doesn't matter much for tax purposes. Up here, you'll want to verify that your taxpayer ID number, even if it's truncated, looks correct. And then you're going to check the box 1A number to make sure that it matches your records. So if you're in the business of handling payment card transactions or working with a third-party network like Square or any of these invoicing agencies, if you do Venmo, PayPal, whatever it is, at some point you can expect that they're going to start reporting your transactions. For tax year 2024, the IRS has put out guidance that they will require 1099-Ks for transactions that total more than $5,000 in a tax year for 2024. This is a transition year. In the long run, you can expect a Form 1099-K to be filed by any payment processor that processes more than $600 worth of transactions in a given tax year. So in this case, John Doe, he sold his car for $50,000 using electronic payments. You see one transaction for $50,000 posted in July for 2023. The rest of this information is pretty much blank. If there's a state withholding state tax, you may see that in here. You may not. So we're going to flip over to our IRS Form 8949 to show you how John should report this transaction. So it turns out that even though he sold it, we'll say he sold it in July, since that's what the form said, but he actually acquired it in January of the previous year. So we wrote the narrative, car reported on IRS Form 1099-K. So the proceeds match up with that filed Form 1099-K. But here John's saying, hey, IRS, I own this car for more than a year. I bought it for $25,000, so I've calculated my gain to be $25,000. Now this was marked in box E for long-term transactions reported on IRS Form 1099-B, showing basis was not reported to the IRS. That actually would probably not be correct. It would probably actually be F, since this wasn't a transaction reported on 1099-B at all. It was reported on your 1099-K. So be careful when you're looking at these fields. You are supposed to create a different Form 8949 for each of these pages. Again, you can only check one box, so you'll need to complete multiple versions of the form. All of it gets netted down at the bottom under totals. This is the long-term transactions portion in part 2. The front page, page 1, contains short-term transactions. So, this will ultimately flow through to your Schedule D, but primarily in the role of either a short-term or a long-term, either gain or loss. All of these net losses and gains will eventually get netted together, and you should have either a loss or a gain to report on your Schedule D from this. So you can check out more information. We'll put links to the other videos and the articles mentioned in this video. We'll go ahead and put links to those in the show notes. And if you want to dig deeper into any of these forms, we'll put links to the articles to them as well. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. If you have any questions, comments, or if there's a question that you'd like discussed in a future video, please hit me up in the comments section. Thank you very much and have a great day.